calivevents.com to register. The African Cashew Alliance ACA presents to you the 16th ACA Annual Cashew Conference and Expo. This year's edition will be held from the 12th to the 15th of September 2022 at the Sheraton Abuja Hotel, Abuja, Nigeria. Theme: Strengthening Sustainable Kernel and Byproduct Marketing in the African Cashew Industry. Join
Good morning, everyone, and welcome to another edition of the ACA Global Market Encounter with Jim Fitzpatrick. Before we proceed, I would like to appreciate all our sponsors and partners who have made this possible. I'm talking about GIZ Move, SNI, Intersnack, CNFA Pro Cashew, TechnoSelf Benin Cashew, just to mention a few. I would also like to remind us that the session is being held in English with a simultaneous French interpretation. To access this service, look for a globe icon displayed on your screen. Select your preferred language and mute the original sound. We'll be taking questions and clarifying your concerns at the end of the presentation. And so we entreat you to use the Q&A feature also displayed on your screen. Today we'll be answering the question, is cashew processing at a crossroads? And I would like to invite Jim at this moment to take over. Thank you. Jim?
Good morning, Blessing. How are you?
Well, thank you, Jim. I hope you too. Please go ahead.
Very well, thanks. Good morning, everyone, or good afternoon. You're very welcome. As Blessing was saying, we're going to have a mix today. We're going to have a conversation about markets, and then we're going to look at this question, is processing at a crossroads, which is really a way of asking, are we at the beginning of a new stage in the development of processing? But particularly, we need to focus on the dominant processor, Vietnam. And we want to ask the question, has Vietnam become a paradox or a contradiction? In fact, maybe has it become a victim of its own success? So we'll be looking at those two questions, but before that, we'll have a look at some market factors. It's been a pretty quiet couple of weeks, really. Looking at the farm gate in African countries, we still see the problems of logistics as the rains have started just about everywhere now. Difficult logistics, particularly the further west we go within the region. Elsewhere, as we come toward the end of most of the harvests, prices are impacted by lower quality. Generally speaking, I think it's been a reasonable season so far. Crop estimates have come in roughly where they were the last time we talked. And although there's no shortage, perhaps the crops are a little bit disappointing in some countries. If we look at the international raw cashew nut market, again, not a great deal of change in the overall position. I think we've seen more arrivals into India. We've seen prices a little bit lower there as a result. We've seen, I think, what probably is notable since we last talked, we've seen Vietnamese buyers more active in West Africa, particularly in Guinea-Bissau. And we've seen this contradiction. We talk about paradoxes, but the main paradox is that the value of the raw material does not reflect the value of the finished product at the moment. Whatever your cost of processing is, whether you're the lowest or the highest. And the question I really need to consider, and I think anyone in the market needs to consider, is how long can that lack of parity persist in the current conditions? It's causing processors difficulty, it's causing losses, and it's causing material to remain in the market when it should by now have moved on. But it's not really causing a significant drop in our CN prices, which is the real revelation. So we're going to talk about, and that is really the essence of our question today, when we talk about the what we might call the Vietnamese processing paradox, and whether or not processing is at a crossroads. Looking at the kernels market, well, kernels buyers continue to operate in kind of waves of buying. Shipped volumes still meet pretty good levels. I know exports from Vietnam are down. I know that if we look at most of the major destinations, if we look at the US market, if we look at China, if we look at most of the countries in Europe, we still see very strong shipments. And I think we have to be a little bit careful on this. I think we have to be careful when we make comparisons. I mean, are we comparing what is probably an average to ordinary year, 2022, with what was an exceptional year in 2021? I do not know how we could match 3 years in a row the kind of growth that we've seen in imports and in demand. But let's see. It seems perhaps it'll happen in the US, but not in Europe. We're seeing prices on kernels led lower, mostly by prompt shipments, mostly by July and August shipments, mostly by mid to smaller processors. And one of the difficulties here is you can certainly buy low-priced kernels, but can you buy them from someone you want to do business with? Can you buy them from a reliable partner for a forward position? Not many buyers leave themselves open for shipment 1 month or 2 months away. We're also seeing continued strong interest in African cashew kernels. The higher prices persist and there is good demand. We have to be careful not to exaggerate that. The market share of Vietnam remains huge, but it is a factor. It is really something that's coming. And of course, that's key to this question, is processing at a crossroads. Overall on demand, notable things I think are that Indian demand probably isn't as buoyant as we might have hoped for. That can change. The busy period in India is coming. It's not that far away now, and that could change demand. There are pretty good stocks of RCN in place for that, I think, but more will be needed. Chinese demand continues to be impacted by COVID restrictions, and various outbreaks of COVID in China from time to time. But really, we need to be careful how we read a lot of these reports in the market. We see a lot of the reports from brokers and others talking about the impact of inflation on cashew demand, on cashew prices. But let's remind ourselves that inflation means higher prices, not lower prices. Inflation does not necessarily mean, if we look at the history, inflation does not necessarily mean that demand for cashew kernels is negatively impacted. Indeed, if we look back through various periods of recession, and if we look at the big picture, we can see that cashew demand has risen every year since 1985, except for one, and that was 2008. And that was really a period from September to December in a financial crisis. So overstating the impact of inflation, which may disappear quickly, according to some analysts, or the impact of a potential recession could lead to mistakes in organizing the market and in supply, and particularly in pricing cashew kernels going forward. Let's have a quick look at the countries that are in a main harvest time at the moment in West Africa. Main features: early rains, now normal rains, logistical problems, and freight costs. These are the three big things. What we're seeing in Guinea-Bissau is continued estimates of a pretty good crop. Prices locally are steady, demand remains quite strong, but these problems of infrastructure, they're nothing new, they're not going to go away anytime soon, but the problems of infrastructure, the port, transportation remain. They're complicating, they make prices higher, they make shipments slower. If we look in Senegal, still forecast of a good crop, although there's probably a lot more material in Senegal than is grown in Senegal. with, it looks like, pretty heavy cross-border trade this year, according to reports. Cargo is not moving yet, which is disappointing. Or if it's moving rather slowly. That puts the quality a little bit at risk, and it means that the delivery to market will be a little bit later. Could have an impact on prices as time goes on, as we're seeing in the Gambia, slower shipments, slower arrivals of the crop. Banjul port is never the easiest to deal with, and we're seeing a certain impact of that, I think, on prices. So generally across the region, it looks like the crops are pretty good. It looks like the usual problems of infrastructure are playing a part, and it looks like the cross-border trade is playing a major part this year. And of course, cross-border trade is related to regulation in the different countries, perhaps high taxation in the countries, but it's also related to the infrastructure and the ease of getting product to where it needs to be, and the ease of transportation, which is proving to be a bigger problem. So it seems to me that the harvest in this area, Guinea-Bissau, Senegal, and the Gambia, will have a pretty long tail on it this year as product becomes a little bit slower to move. And that could have impact further down the line, as raw cashew nuts are needed for processing and export in Vietnam and for consumption in India. So not a very busy period in the market. I don't expect a particularly busy week this week or next, but I think we're coming to a point where we might see the market transition on kernels into a slightly different trend. So it gives us a good opportunity to have a look at some of the more basic questions, and we'll have a look at this question: has the Vietnamese sector become a paradox? What I'm really asking here, we could say, has the unstoppable force of Vietnamese processing development and market share met the immovable object of this complicated and malfunctioning international raw cashew nut supply chain? That's really the crux of the issue here. And if we look at the structure of the market, first of all in Vietnam, and we look at the number of units, the type of units, and the structure of the market. So there are, I'm told, a total of 3,000 units in Vietnam that might process, pack, most of them very small, most of them micro units. There are maybe 350 processors or processing units. Of those, about 250 are export suitable. And then we have an unknown number of, at least unknown to me, number of packing centers and export units that draw product in from further up the chain to convert it for export. So this issue is recognized in Vietnam, and that's why I'm putting this quote from the chair of VINACAS, Mr. Nguyen Duc Tran. And I'll just read what he said. He said, quote, "It can be said that this huge pressure on the competition when deploying sales strategies and product strategies of each enterprise, as well as the whole industry." So there's essentially saying that this structure, where so many units are competing with each other, and I want to remind you, they're competing with each other for supply of raw material, as well as for sale of kernels, puts pressure on the whole industry. And he goes on to say, and this is probably the crux of the matter, and he's observed it very well, in my opinion, if these enterprises do not restructure, invest, and operate professionally, and work their way up themselves, they will face many difficulties or may even be eliminated. So what we're talking about here, in a word, is a rationalization of the industry. And we have to ask the question, does this end, the 3,000 units, the subcontractors, the village processors, does this meet the needs of buyers? it doesn't really meet buyers' requirements. I think that's a fact. There are also questions about labor practices in this part of the industry. I'm not saying in the organized processors, I'm talking about subcontractors and small units. And we do know that in this part of the industry, there are big questions. If you read the Ethical Trading Initiative of Norway's report on the Vietnamese cashew sector, you get a flavor of that. If you read the Vietnamese Minister of Commerce report on child labor in the country from 2017, you also get a pretty good flavor of what can happen at this end of the chain and whether or not that's sustainable. But does it meet buyers' requirements? No, it doesn't, in many, many ways. Whereas the major processors do, this end of the chain doesn't. And that's the contradiction which the chair of VNCAS is referring to. I don't think he's referring to labor issues. I think he's referring to the commercial aspects, but it's true of both. So we'll go back to the question we asked 2 weeks ago. Because I think this question, on reflection, when we asked the question regarding the processing crossroads, this is a really important question. So I thought we'd go back and have a look at this as we work our way toward an answer to the question. So let's remind ourselves that we have seen prices crashed, and I'm saying crashed because we're looking at 30 cents, 40 cents drop in prices in a very short period of time. Why would the dominant supplier do that? And we talked about misreading the impact of the pandemic, but we could also now add misreading the impact of the war in Ukraine, misreading the impact of the return of inflation. Same reaction. Competition or competitiveness based on price. And I'll come back to that in a moment, but if you compete solely on price, your reaction to a perceived drop in demand is to drop the price. Cash flow plays a huge impact, and the cash flow impact of a loss of sales to China, which are paid for quickly, which move all grades and happen in the early part of the year, has a huge impact. And that is influenced by the financing method for export. So if you're looking at collateralized inventory, in other words, your finances against contracts of sale, purchases of raw material, or stock in your warehouse, and you can raise varying amounts or percentages of the value according to which one it is, that's going to encourage you just to keep going, to make contracts, to collateralize your inventory. Then you add into that those financing mechanisms, they're trade finance mechanisms, so they're not continuous open credit lines. Trade finance mechanisms operate in windows. So it might be a 3-month window, it might be a 6-month window. But as you work your way through, you've got to do the same thing again. So this has a huge influence on the way the business works. And if you're talking about many small units, many mid-sized units that may not be as financially independent as the large units, you get this effect. We have to sell because we have to show we have sales. If that just happens to be the day that buyers aren't interested, we'll drop the price. If we look at other factors coming into this, so you're financing against losses over 3 years, partially due to the pandemic, partially due to the low price environment that your own sector has created, perhaps the competition between these units, perhaps this paradox. And you're doing that within a long fractured supply chain, so that the delivery time for your raw material, instead of being days, as it might be for the local crop, for the Cambodian crop, for a West African processor buying raw material for processing, it might be a week. But if that is 6, 8, 10 or more weeks, that then complicates the position further. Plus, the reliability of that supply is questionable at times too. Then we add into that the two big factors that have been there for so long: poor market analysis and information, and a misfiring effort to influence prices, and not forgetting that all of these factors influence each other, you get this situation where prices start to drop, which creates a situation of lack of parity with RCN, which creates lower performance, losses perhaps, or very low profits, which makes it difficult to finance, which makes it more important to have a contract of sale, which makes you have to drop the price, which makes you lose more money, and you get into this kind of vicious circle. And maybe that's where the Vietnamese cashew sector is right now. And I think the quote that we've seen illustrates that people are well aware of these kind of issues in Vietnam. What's actually happened in that time is that the kernels market, yes, it did hit the lowest prices for many years, but Vietnam's market share remained extremely high. Exports grew by 64%. So we do see a retracement of exports this year. Exports are a little bit lower than last year, but still the growth in the last 4 years has been incredible. Never seen before. Maybe it will never be seen again, but it's absolutely incredible level of growth. And it's interesting that when you run a system that continually demands improvement, continually demands higher turnover, higher growth, higher exports, higher export values, you're ultimately going to fail. It's not physically possible to do that year on year. And that can send the wrong message to people in the industry. If we look actually what did happen in markets, we see huge growth in Europe. We see huge growth in the US. The US market, which was growing at an average rate of about 1% for 5 years, in the last 3 years has grown by 17%. So what we've seen is remarkable growth. We've seen higher farm gate prices in West Africa. Much higher, in fact. We've seen a complete recovery from the decline after the 2017 price boom. But we've also seen much higher freight costs. So we've seen surging freight costs during the pandemic, but now we're seeing freight rates to Asia, as opposed to kernels coming from Asia, are rising on energy costs, as we know, and on capacity issues in a long hangover from the pandemic disruptions. So that's what's really happening, and it's at odds with the perception that we're seeing, or at least the behavior we're seeing from Vietnamese processors. So let's have a look then, standing back for a moment, let's have a look at the cashew world as it stands at the end of 2021 and into 2022. So Vietnam's competitiveness is based on technology and scale, which allows lower cost. That allowed Vietnam to take a huge market share, as we said, 89% of the US market, 77% of the European market in 2021. But the contradiction is that Vietnam is, in 2021, was 82% dependent on imports. Now, a lot of those were from Cambodia, but most of it was still from distant origins. And if we look at VNACAS, if we look at generally the trade in Vietnam, their public statements, if we look at the Ministry of Agriculture and Rural Development, we get statements that we want to protect our existing production, the 300 to 330,000 hectares of production in Vietnam. We want to also increase the yield to increase our production, and we want to increase our exports. So ultimately, that must mean increased imports, because you're not going to increase production dramatically in a country where yields are already amongst the best in the world. Then we look at the main competitor for raw material, India, and we look at India, a protected market. Effectively, the import of kernels is banned from India. It's not actually banned, but it's effectively banned by the customs tariff and the minimum pricing. It's a protected market. Therefore, it can pay more. The Indian market is trading usually about 25% higher than the world market for kernels. So despite higher costs of processing on average, Indian processors can probably pay a little bit more than Vietnamese processors for RCN. I'm not saying more than today's market. I'm not talking about today's market. I'm talking about the relative ability to pay higher prices for raw cashew nuts over a long term. We also know that Indian consumers will consume more cashews. We don't know whether demand will grow very quickly, as it did from 2008 to 2015, or whether it will grow a little bit more slowly as it has in recent years. But we do know it will grow. And we also know that Indian production will grow, but that will be relatively slow. So you have Vietnam now competing with India, which is a protected market. Exports from India have fallen. I think they peaked around 125,000 tons. Last year, it was 54,000 tons. So it's over a long period of time, processors in India turn to the domestic market. We look at consumers in North America, in Europe, in the Middle East, and the message we're generally getting over time, and this is a message from the numbers and not a text message. The message we get from consumers is that whether cashews are $2.50 a pound or whether they're $4 a pound, we love them and we'll continue to eat more of them. And that's really important when we consider the current context of low prices and high priced RCN and the crossroads. So the price determines whether consumption grows quickly or slowly, but the message from the market over the years is that consumption continues to grow. Producers say, particularly African producers, definitely would like to grow more cashews, especially since you're paying us more money for them lately. But it happens slowly. It takes a long time to plant a tree. It takes even longer to plant the right tree and for that to come to production and for that to mature. So you're looking at 4 to 7 years for something that starts this year to yield. And governments are saying, well, there's an opportunity here. We recognize now that the buyers of raw cashew nuts, they need us as suppliers. We're happy to supply them, of course, but we're also recognizing that our farmers, the governments are saying our farmers deserve more, they deserve better prices, better terms. And we want to deliver that to them. So they set minimum or guideline prices and they try and improve quality. And they also say, well, there's an opportunity here for tax revenue, which maybe we can use to develop processing, or maybe we can use to reward farmers, or maybe we use it for some other purpose completely. But whatever it's used for, it's a fact. The taxation has, generally speaking, over the last 10 years increased. It's dropped in certain cases. Côte d'Ivoire dropped their taxes in recent years, but generally those taxes have come on. So in this context of the market, we're asking the question, has Vietnam become a victim of its own success? What was that success based on, is the first question. So it was based on technology. Going right back 30 years, technology and processing was important in Vietnam. It's based on scale. It's based on productivity. It's based on good management. All of those factors. Vietnamese processors therefore have lower costs. So they can sell at lower prices than competitors in India or Brazil or Africa. Lower prices means higher kernels demand. Higher kernels demand means more need for raw material. Expanding need for raw cashew nuts, greater than can be produced at home, increasing the dependence on imported raw nuts. Need for more raw material, and especially that competition with the protected market in India, means higher RCN prices. And that should mean higher kernels prices. But what we've actually seen in the last 3 years, for all of the reasons we're going to talk about, is that we've seen lower prices. So even if we look at today's prices, and let's take some of those offers for prompt shipment around 280, 285 for 320s, and I guess some would even sell lower. The response to a dominant position, the response to higher RCN prices, the response to better demand has been lower kernels prices. And that's because that's worked in the past. Competition has been on price. And this creates probably a greater dysfunction between the RCN supply and the kernels, what we call the parity, than we've ever seen before. So if that's the basis of Vietnam's success, let's have a look a little bit more closely at the sector and how it works, because the answer to the question, is processing at a crossroads, is in two areas. It's in the condition of the industry in Vietnam, and it's in the ability of processors in other countries, especially in Africa, to develop their processing industries. So I looked at it under four areas: the market dominance of Vietnam, and we know that's a fact, the way the sector is organized, the supply chain weakness in the RCN chain, and the way the RCN management, the way the RCN market is managed. If we look at the market, so we look at this market dominance, and I would describe it as a double-edged blade, or as they say, it cuts both ways. High level of dominance in export markets, but no alternative, no domestic market, very small domestic market. Combine that with poor market information and a strategy based on low prices. Fundamentally means that the response to slow demand, the response to even a perception of slow demand is to offer a lower price. Add into that the sector organization. There are in Vietnam some of the best factories in the world, some of the largest factories in the world. I think probably all of the largest factories in the world are in Vietnam, but there are also many small factories. There are packing centers. Many of these suppliers are unreliable for forward sales. Many of them are perhaps unreliable in the event of claims. So buyers who want to buy forward are reluctant to do so. This creates an internal competition, creates a market where you've got this spot or prompt market, and you've got a forward market, and they're two completely different things, different suppliers, different pricing structures. But what we see leading the conversation is the prompt market. So this internal competition ends up hurting all players, particularly when interest rates are low, and you can make a calculation, well, I'll buy from a small player and carry it if I have the finance. If we look at the supply chain weakness, high dependence on imported products, 80+%, most of that traveling about 16,000 kilometers, makes it very vulnerable to higher costs. And that's exactly what we've seen. We've seen higher freight, we've seen higher costs of tax, we've seen higher prices bring the product from the farm to the port. So this complex supply chain, which always had questions about reliability, always had questions about sustainability, has more recently started to evolve into a much higher cost supply chain. Add into that weak markets or weak networks at origin. From a Vietnamese perspective, processors generally are not connected at the origin of the RCN. There's no integration of the supply chain in the way a local processor might know the farmers or the cooperatives or the groups that they're buying from. Processors in Vietnam, and most processors in India too, they don't know where they buy the stuff. They know it's FOB, they know which country, they might even know which region is the best region to buy in, but they don't really have an understanding or an integrated supply chain. And in times of high costs, that becomes even more important. The supply chain weakness is also increased by having to compete with a high value market, India, where prices are higher. I know that's balanced with processing costs being higher, but we're asking about the crossroads, and think of the potential if India were to get its cost structure for processing under control or at the same level as Vietnam. And then we look at the RCN market management, and we think about the dominance of traders rather than processors buying in an integrated supply chain. We talk about this mismatch of the demand for buyers for forward purchasing to the end of the year into next year versus the inability to cover raw cashew nuts forward. It draws processors into speculation. And it's expensive. If you want to fill a warehouse with RCN and you're doing that on a trade finance mechanism, that's costly. You can't just say interest rates are low, you can stock it. You have to remember that the whole collateralization of inventory is a pretty expensive process and attracts higher interest rates than we would typically see on longer term investments. Add into the market management the fact that governments, especially in Africa, have taken a much greater interest in the cashew chain, and they've decided to tax exports. The complete lack of control, and this would probably go for most chains at the moment, but the complete lack of control of costs. There's no option. If you want RCN to process in Asia, you need to pay the freight. You need to pay the trucking. You need to pay the loading costs. And that's done in the price. And thus we get this lack of parity. And a lot of this tends to lend itself to a speculative culture, which creates risk, and risk creates cost. You don't always get it right. When you get it wrong, it creates cost. So we look at these factors, and I'll just highlight those few factors you see in red as areas where, let's say, call them signals that there's a rationalization happening in Vietnam, and that leaves us at a crossroads. The rationalization of the sector in Vietnam means that processing may be approaching this crossroads where the balance, the huge dominance of Vietnam for the export trade starts to switch back. And I think that's recognized, as we've said already, in Vietnam. So why is this happening now? There's a few things I'd point to. There are a whole spectrum of things why this is happening now, but I'll just point out a few for discussion. First one is, still consumers in the West are saying, we love those cashews. By the way, are they sustainable? And the answer is, well, maybe. Actually, maybe not. You can't really answer that question if you're sourcing a product that moves 16,000 kilometers one direction and then 20,000 kilometers back the other direction to market. It's not sustainable is the real answer. Producing countries in Africa especially are saying, you know, we could process here. We could process here competitively. And why they're able to say that is because the technology, which comes from Vietnam to a large extent, comes from elsewhere too, but most of it's coming from Vietnam now, and which issue was raised in Vietnam back in 2015, that this technology makes it possible. It makes it possible to invest more easily. It makes it possible to predict the results. It changes the management challenge. It makes food safety more likely. It makes it easier to invest at scale. Governments are saying, you know, we want fair prices for our farmers. We want to set guide prices, reference prices, minimum prices, whatever they are. We want to set it so that our farmers get a better return on their product. And that's particularly a focus because, as we know, for many years they did not. You know, go back 15 years ago and you were looking at RCN prices around about $200 a ton in parts of West Africa. Look at costs. The cost of moving the product as RCN from African countries to Asian countries has increased, and so has the cost of moving it back the other direction as a finished product. The cost of the freight, the cost in terms of time, the cost in terms of management, all of these things have increased in the last 2 years. And although the reasons for that have changed, there's no real sign of any fundamental shift in that trend for the time being. Many would argue that freight rates were far too low anyway prior to the pandemic. And then you add into all of those factors which have been happening over the past 5 to 10 years. You put in COVID, you put in the pandemic. And the pandemic increased costs because it made infrastructure problems even greater. It magnified the impact of infrastructure issues. We see that in Guinea-Bissau. but you see it elsewhere, and you've seen it last year and the year before. We've also seen this kind of stop-start demand from China. Earlier, I mentioned that China was an important market because of the way it buys and when it buys, more than how much it buys. It's had a big cash flow impact. And that cash flow impact came in each of the years 2020, 21, 2022. That came at a time of year when the financial demands on processors were at their greatest, when the crop needed to be bought. So all of these things are going on, and generally crises tend to, let's say, bring things to a head. They tend to accelerate change. And the question is that what we're seeing? Now, meantime, you've got processors in Africa, or investors in Africa, are saying, our cashews are sustainable. Will you pay a higher price? And the answer to that has been, yeah, we will pay a higher price, not from all, but from many. And we're seeing more and more interest in buying African cashews for all of those reasons. There's cost on the one hand, the cost of the freight, for example, but there's also sustainability, delivery time, reducing dependence on a single supplier, and a whole range of other issues. So that's why this situation, which has been happening slowly, I think, this approaching the crossroads, is now starting to accelerate somewhat. But what may be interrupting it, or what may actually be accelerating it, is price. So the response to higher costs should not be lower prices when demand is healthy. Now, as we've seen, we've talked about it a number of times, prices have hit 2009 levels. We've seen this seasonal price pattern. Is this a signal? Is this a sign that we are at a crossroads? So let's ask the question, is processing at a crossroads? And let's look for the signals. First of all, we see this seasonal processing and these trends mainly driven from Vietnam, which tend to indicate that there is a conflict, there is need for change, there is need for rationalization in Vietnam. We see strong and healthy demand just about everywhere. Sure, June exports from Vietnam may be down a little. May exports were down a little on last year. If we look at May exports and compare them to 2020 or 2019, they're sky high. It's only when we compare them to last year that it looks a little bit negative. Now, if you work in an environment where every year demands bigger numbers, that's not good news. But if you work in an environment where you say, well, the long term is the important thing, it looks pretty positive. If we look at costs, we've seen costs increase. And the key cost that's increasing is in red. And this is the cost of moving the raw material to market. Whereas that doesn't really change. It changes a little in West Africa. It doesn't really change for Vietnamese processors buying Vietnamese or Cambodian raw cashew nuts. It's getting bigger and bigger for Indian and Vietnamese buyers of African RCN, and thus this parity contradiction. So, and it comes to the question, is processing far from origin actually profitable? Can it remain profitable in competition with origin processors at a time of high costs? So why did this huge trade in RCN evolve? Firstly, it evolved because raw cashew nuts were not appreciated in terms of their value in West Africa. It took Indian buyers initially and Vietnamese buyers later to demonstrate the value of raw cashew nuts. Secondly, it was based on low costs. Low cost of the raw material. As I said, when this trade really took off, you could buy raw cashew nuts around $200 a ton. Now what's happened is that the price has caught up. Governments have been more active, market information has been better, there's more transparency in the industry. Now you see this rise in costs. So the costs to import have risen. Freight, export taxes, minimum pricing. So actually what we see is a question mark over this trade. If you have low kernels prices, can you make money shifting that product halfway around the world to process it? And the answer of the last couple of years is no. And the question we would ask, is that a short-term phenomenon or is that a longer-term situation? If it is a longer-term situation, that means we are at a crossroads. So the whole range of factors going up. Let's look at some of the signals that might give us a better idea of where we are in this transition or this rationalization, if that's happening. So first of all, we look at shipments. So the emphasis now is on shorter, more flexible supply chains. And we look at the supply chain from West Africa, or East Africa for that matter, into major markets in North America and Europe. And we know that it's shorter, it's quicker, it's cheaper, and critically, it has a much lower carbon footprint for delivery. If we look at the signals from West Africa in terms of processing, well, we are seeing growth. Some say that there'll be 180,000 tons processed in Côte d'Ivoire this year. We see huge increase in the quantities bought by processors in Nigeria. Now, whether that's all going to be processed or not remains to be seen. But we're definitely seeing a different type of investor. We're seeing more investors from outside the sector. The old way of a trader becomes processor with the small factory is pretty much gone now. We're seeing more interest from buyers in integrating their supply chains. We're seeing probably in countries like Ghana, it's not decided, but probably we see more support for processors. We see Benin having a rethink on processing. So we're seeing changes in policy. We're seeing in Tanzania a slight change in the policy, and now we see for the first time in years an expansion of the processing capacity, 2 big factories in construction. And we see a modest but significant increase in market share for African kernels in Europe and the USA. So what we're seeing really is a little bit of a change of mindset. And if the minds change, everything will change. If the minds changing will change the attitude of banks, financiers, investors, managers, workers, and suppliers. Looking in Vietnam, we're seeing reduced processing. So we are seeing a kind of a rationalization, as Vinacast's chair referred to in the quote we mentioned earlier on. We're seeing a lot of the processors not making money at the moment. That causes change. We're seeing the efforts for a production increase relatively abandoned. I mean, the idea of, it was mooted a few years ago, we can get yields up to 2 tons per hectare. I don't think that's going to happen. I think they will increase their yields, but not to that level. So there's been a much greater focus on buying in Cambodia and in supporting production in Cambodia. And then we see a real focus beginning on more value addition. So we are seeing a focus in Vietnam to say, maybe we don't need to process 2.5 million tons of raw cashews. Maybe we need to process a little bit less, but do a lot more to it, add a lot more value, make a lot more money out of it. And things like their trade agreement with the European Union, which brings the import duty on roasted and consumer packed cashews down from a high of 12% down to 0. This opens a very interesting door for processing, value-added processing in Vietnam, which already happens. They already export processed products to Australia and to the US. In India, we are seeing, now this is slow as far as I can gather, but we are seeing signs of the mechanization of processing, which will ultimately reduce costs. If that continues, it could be quite an interesting development. On the other hand, we're definitely seeing in West Africa, we're seeing certain factories struggling. We're seeing a secondary market developing where some factories process but then resell because they're not capable of either financing or exporting or marketing. We're seeing tough times for processors in Mozambique. And I asked the question that the growth in Côte d'Ivoire has been largely subsidy driven. How will that be managed? You can't subsidize forever. How will that be managed? Who will survive? Will there be a rationalization there? So it's not all plain sailing. There are big questions over the development of processing in West Africa. But there are enough signals there to say, perhaps we're not right at the crossroads, but the crossroads is on the horizon, and there is likely to be a rebalancing of processing. Has that happened before? Of course it has. Most things have. We saw a shift in processing from East Africa to India in the 1970s and 80s. We saw a shift in the export trade from India to Vietnam in the 1990s and over the last 20 years. We saw production, a massive shift in production from the emphasis in Asia to West Africa, to the point that West Africa has become the driver of production increase. So has this happened before? Absolutely, it's happened before. And therefore, the prospect is there. We are, as I say, maybe not quite at the crossroads, but it's on the horizon. Could this be the future? Could we see a situation where large-scale African and Brazilian processors supply mostly to North America and Europe? That would certainly be more sustainable. Where Vietnam processes less, and personally I feel that we've probably seen the peak of processing volume in Vietnam, but not the end of the industry by any means. Perhaps there might be, for raw material for kernels, a focus on regional markets, China, Japan, other growing markets. But for markets far away, it would make more sense to have a focus on high levels of value addition, consumer packed products, secondary processing, for markets like the European Union and the United States. Could we see in India that following mechanization, following revamping of a number of factories, that India becomes competitive again in the export market? And I'd say re-enters the export market. India's never left the export market, but its volumes have collapsed. I think I told you earlier that it's come from 125 to 54,000 tons over 20 years. In 5 years, it's come from 89,000 tons to 54,000 tons. This is a big factor. But lower costs, maybe location of processing plants in different places, might cause India to re-enter the export market as a major player. If we look at China, well, we'd have to ask the question, can China become a major consumer? Consumption in China has been growing. If it does, will it become a processor? They're not going to grow a lot of cashews in China ever, at least on the climate that we currently have. But what would be the difference between processing in Vietnam and processing in China? That's a question that had to be asked. There's not much signals of that at the moment, but it is a question. So there is a prospect for a future which involves a rebalancing of processing around the world. Most buyers would welcome that because it would reduce their dependence on a single origin. It would strengthen the supply chain. It would allow for greater integration of the supply chain. And it would stabilize pricing. It would remove some of the volatility. But there are factors that might slow this down. What are those factors? I think these are some of the key factors. So first of all, it's a high dependence on Vietnamese technology and Vietnamese suppliers could be a barrier. If, for example, the Vietnamese processing industry is itself contracting, will the supply of equipment become more difficult for Vietnam? And as we know, there's a very high dependence on Vietnam for supply of processing equipment. I think also there's a shortage of managers, of processing managers, of available people with the necessary experience to operate these factories. Where are they going to come from? This is a big question, particularly in West Africa. You have a lot of expatriate managers. Well, that can't continue forever. So where are we going to find local managers with the necessary training to run cashew factories? Key factor would be, put it like this, African processing is today in a proving stage. If processors fail to make it on food safety, which realistically is a quality management system like a BRC, or if they fail to make it in terms of their contract reliability, then the growth and the rebalancing of the industry worldwide would be in jeopardy. Poor policies, if governments make big mistakes, this can always be an issue. One of those things that I think is important in that context is the overprotection of inefficient processors. This is key for African countries, in my opinion. If you look at a situation where an inefficient processor continues to operate because he's subsidized for a long period, that places the industry in jeopardy. The point of supports, subsidies, purchasing windows, inputs, training, the point of them is to make businesses efficient and to make them long-term businesses. If they're overprotected, it puts that in jeopardy. If they're overprotected, what would happen is that at some point in the future, that'll catch up with them. They'll become unreliable. The reputation of the sector will fall, and buyers will become nervous about buying from African cashew factories. At the moment, most of the exporters are doing a pretty good job. But it's important that there's that balance between the efficient and the inefficient processors. And finally, I think we should also bear in mind that today, investors in processing, and probably in all kinds of investment, see countries like Cote d'Ivoire or Ghana differently to the way they look at countries like Guinea-Bissau or Mali. So we cannot expect to see even development in processing across West Africa, across the continent as a whole. We are likely to see fast-track development. We're likely to see certain countries, due to lack of investment, continue as suppliers of raw cashew nuts. But back to our question, if we look at this question, are we at a crossroads? I think we probably are approaching the crossroads, and there is an opportunity to take advantage of that. Whether it's taken or not depends on really how we manage these 6 factors on the screen, plus a range of other factors. So I think, yes, we are at a crossroads. The chances are that 20 years from now, and we need to think about it in the longer term, 20 years from now, there will be a balance of processing in the world. Less volume, higher value in Vietnam, more export from India, much more processing in Africa. So thanks very much for listening to me on this topic. I'd love to hear your questions or your remarks on it. And for that, I'll hand you back to Blessing.
Thank you very much, Jim. We have a few questions, and we'll just go ahead and read them out for you. The first question is, given the number of processing units in Vietnam, which is revealing, are the lower kernel prices not rather a reflection of the internal competition?
Yeah, I think they are, and I think that's one of the messages I was trying to convey, that this very complex situation, particularly with the position of subcontractors, it is a sign of internal competition, and competition is for sales primarily, but also for supply of raw material, also for resources, managers, machines, and so on. So yeah, definitely it is.
Okay, I have a following question which says, can you explain the mechanism and regulations governing RCN trade in Vietnam, especially the forward sales?
I don't think there's any regulation of RCN forward selling in Vietnam. I think that generally forward selling doesn't happen in the market, or it doesn't happen in the same way it does in kernels, simply because that's not the way the trade is structured. So if you're a farmer and you have a crop, most of the time you want to sell it now or within the coming 5-6 weeks. If you're an export trader in West Africa, you want to sell the product where at the end of June, you want to sell it for July shipment, maybe August shipment, but you certainly don't want to sell it for December, November shipment. So it's not a case of regulation, it's a case of the way the market functions, the mechanisms, rather than the regulation. There's nothing stopping people selling forward. but they would be taking huge risk. People today will sell product that will be delivered from the East African crop 2022. That means the kernels will come to market January, February, March next year. They'll even sell kernels further than that forward. If you were to sell raw cashew nuts like that, you'd be taking a huge risk, and that's why it doesn't happen.
Thank you very much, Jim. I have a third question here. The person wants to know, when one talks of Vietnam, what comes up is the use of high technology in processing. With such a high number of small processors, what types of technology are in use by these small processors?
Well, I think there's a really interesting question. So we know that some of the most developed high-tech facilities in the world are in Vietnam. And we know that that's been a primary driver of success. But in a lot of small units, the technology approach is much lower. And there would be an element of manual processing, manual shelling particularly. There would be small scale shelling. There would be subcontractors that use machines. But when you have so many small units, you're bound to get a lot of manual processing. So you get this diversity. So the tip of the triangle is high tech, highly mechanized, but the base of the triangle is something quite different. And that's a fact. And if you go, it's a very interesting thing you can do. Go and just do an internet search and look for pictures of processing in Vietnam. And you will find almost exclusively on the first 6-7 pages of your search, machines, factories, efficiency, technology. Do the same thing for India, and you will find this mix. You will find machines, but you'll also find manual processing. So it's much more transparent. And that's a concern I think we should all have, what goes on in the smaller units that may be using technology in shelling and may not. And there's concerns there in terms of labor, in terms of the workers' welfare, in terms of health and safety in those factories. And those are significant concerns. And I think if we look at the commentary from VINACAS and the commentary from ministries in Vietnam, I think that they are somewhat aware of that themselves. This is not some news I'm bringing. I think this is a well-known fact.
Thank you very much, Jim. Someone wants to know, is there any indication that Vietnam would stop the supply of cashew processing equipment?
I don't see any indication of that. It does surface from time to time. It is discussed, but there's an industry there. There's an export industry that's pretty successful. I don't think at this point that stopping the supply of the equipment would make much sense. I think it would probably slow down the development of more equipment. You might see a situation where sometimes what's happened in the past is the latest machines haven't made it to market. But generally speaking, no, I don't see any indication of that now. And I don't think Vietnam wants to go in that direction. Bear in mind, Vietnam is dependent on African countries for the supply of raw cashew nuts. Blessing.
Yes, thank you, Jim. So the fifth question here is, what is needed for large-scale mechanization of processing to take place in Africa? That is, the person wants you to clarify the factors that might slow down this as you presented in your last slides.
Well, I think if we look at the development of mechanized processing, the fact is you need more money. You need more capital to invest in equipment. You will have to pay for the equipment, some of it when you order it, the rest of it when it arrives. So you need the money to pay for that. You need to have a purchasing program which allows you to purchase efficiently, knowing what you're getting, and to commission and install that material on time and working well. So you need a certain amount of expertise and business planning. You need to come to scale. If you're going to invest in machines, you need to be processing at a scale that justifies that investment. You need to have managers and staff who are capable of learning quickly how those machines work. Perhaps you need access to an expatriate manager who's experienced, or a manager who already has experience in the country. running these machines, so you can get that up to scale, and you'll find that across Africa. And I think it's important that those individuals are also good at training their staff, so that if they move on, there's someone who's expert in it. So the key things are good business planning, good concept, additional capital expenditure, access to managers, and of course you need staff, but you need far fewer staff and far less labor than you would have done in the past. And that means that you can get up to scale much quicker. So it might have been in the past in a manual factory that you would need to train people over a number of years, but they can learn to use the machines much more quickly. And of course, you're training much fewer people. You know, for a 10,000 ton processing plant, you might need 450, 500 people, whereas in the past for 10,000 tons, you'd need thousands of people, and they would all have to be trained in some of very skillful tasks, some of them. So it changes the emphasis. It also changes the type of investor, and the investors become more corporate, they become more likely to be international, they become more likely to have a clear vision of where they're going in the industry. Blessing.
Thank you very much, Jim. I have a few more questions. The next one is, if India returns to the export markets at its past levels, what will be the impact?
Well, it'll be part of this rebalancing. I think that if India returns to the market, what we might see is different differential pricing. I think that probably Indian cashew kernels will be of higher quality if that happens. I think that we will see maybe a return to a situation where Indian kernels in the international market are making a premium. Generally speaking, kernels prices would have to be in a much higher price environment for it to make sense. Otherwise, Indian processors would simply continue to sell in their domestic market. But it would also balance risk, because, you know, if you're an American buyer, you're almost 90% depending on Vietnam. If you could reduce that a little and buy some from India and buy some from Africa, you might feel a little bit more comfortable with the level of risk. I think competition generally is likely to create efficiency. So personally, I think it would be a good thing. I hope it happens. But it's not going to lead to, for example, it's not going to lead to a price war between Vietnam and India. It's not going to lead to significantly lower prices in the market. The supply of RCN is what determines the availability, and that's not going to change by it being processed elsewhere. What it might do is, it might, as the chair of VNIC has pointed out, it might lead to some of those smaller factories in Vietnam either merging or going out of business. Blessing.
Thank you, Jim. The next question here is, how long will African processors survive those high trends of RCN prices?
Well, I'd probably put it slightly differently. It's a good question. I'd say, how will African processors survive these low kernels prices? Because if I look at RCN prices, it is difficult to make a profit, but it is possible to make a profit at the moment if you're well organized, and we know factories in Africa who are making money. They will survive by building better integrated supply chains. They will survive by reducing their costs of processing to more international levels. They will survive by building more sustainable links to buyers, so that they're not fighting in the market. What's happened in the last 2 years is that the discount for kernels, you're African, so your kernels are going to get a lower price, that's gone. It's actually flipped. It's the other way around now. So I think that it needs careful supply chain management. It needs integration of the supply chain. You need to have the funds available early in the season so that you can buy RCN early. You need to have your processing plant set up in a way and in a place that makes sense. It needs to be at a scale that makes sense. And it needs to be based on the idea that you're processing local RCN and that is part of a supply chain that's built into your local environment. In other words, you know the people you buy from them every year, you agree the prices, there's good years and bad, but you continue to work together. I see that as the way to survive, and that's the way that the Vietnamese have been successful.
Thank you very much, Jim. The next question is, how will African industry cope with a limited number of expatriates factory managers?
Yeah, this is a huge question. I think we've got to consider that training, education is necessary in cashew processing. We've got some very good success stories in African factories. How can those success stories be used to train factory managers? Expatriate factory managers are difficult to find. They're also expensive. But initially we're looking for experience and ability. And I think therefore there has to be some form of support from governments to train factory managers. There's been a lot of training over the last 20 years in the cashew sector in Africa, mostly related to production. And now we do see the beginnings of training related to processing. So I think when an expatriate factory manager comes in, it's very important that that person is also prepared to train the staff around them so that that staff can benefit from the experience. Because most people, most expatriates, they don't stay forever where they are. Big challenge, but there are ways to manage that. Blessing.
Thank you very much, Jim. The next question is, how can processors manage their market risk?
Processors can manage their market risk by having an integrated supply chain in the first place so that they carefully buy the right quality product, they buy it at the right time. But they really manage it by having the opportunity to make forward sales that are related to the price of or the cost of the raw material that they're buying. That's the key way to manage market risk, and to have relationships with buyers that understand that, and that understand that it's necessary to do some business during the harvest period. And we do have a pretty wide window of a harvest period in West Africa and indeed in East Africa. And that's the time to start managing market risk by making sales. Market risk, this is volatile industry. Market risk is to be avoided. And that's a key way to do it. Good marketing is actually the key to avoiding market risk. And marketing works both ways, both in your supply chain and on your sales side. Another way, maybe longer term way to reduce or avoid market risk is to add more value. So roasting, salting, packing, those kind of things can reduce market risk significantly. Over to you, Blessing.
Thank you very much, Jim. The next question is, what about the mechanisms for forward sales of kernels and how that affects prices?
Well, the mechanism is forward contracting with reliable buyers, which is about good marketing, good relationships, having the right reputation for reliability, and having the right food safety and quality management systems in place. If you want to make forward sales, you need to be on your game. You need to be on your game every week. And it's important that when you contract, and the way it's done is simply to have a forward contract. Most forward contracts are fixed price contracts, fixed priced, fixed volume, but they don't necessarily have to be. They could be contracts with a flexibility in the volume. They could be contracts with a flexibility in the pricing within certain parameters. That's always possible. You will pay a price for that, but it is possible. We have recently ourselves helped someone as consultants put together a deal where the price of the kernels, which are delivered over a long period throughout the year, is related to the price of the raw material, and the customer pre-finances some of the raw material in order to guarantee the supply of the kernels. In return, the processor offers a discount, but there's huge flexibility in there. All grades will be taken, and they'll be taken as and when they're available. But that means a really close and good understanding type of relationship with your customer. How does that affect prices? Normally, if you're selling forward, you're a processor that's qualified in the sense of having a reputation for reliability. And normally forward contracts are trading at higher prices than premium, which is different. I won't go into the technical terms, but in cashews, it's different to a lot of markets where the prices for spot goods can be higher than the price for forward and the prices for prompt. So today, if you sell prompt, you're probably in, let's say, a Vietnamese exporter, you're probably getting a lower price for prompt than you would be for forward. And that reflects mostly the risk that the customer sees in both of those different positions, but it also reflects the cost of carrying the product through to a forward position.
Thank you very much, Jim. The last question here is, could inflation or a recession stop the trend? Has it affected cashews in the past?
Yeah, I mean, I don't think it could stop the direction of the trend. I think that demand is going up. I think a lot of cashews in the world are not bought by people who are particularly affected by inflation at the moment. There would be certain exclusions to that, but certain markets would be different. In the past, we haven't really seen major reductions in consumption or changes in direction of the trend during periods of recession or inflation. Now, we haven't seen inflation for a long time, or at least inflation at these levels for a long time. I don't think it'll affect the trend in demand, but I think it will potentially slow down the growth of that demand.
Thank you, Jim. We have a question also from Bala, who wants to know if optimization of processing parameter has it been achieved for obtaining white whole kernels recovery in mechanized processing?
Well, I think the answer to that is that mechanized processing still probably breaks more kernels than manual processing. That seems to be a fact. Optimization, well, what's optimization? I mean, optimization will be zero breakage. Can it get any better than it is? Definitely. I think it probably can. I don't see any huge leap forward on what I understand right now. I don't see any huge leap forward in the processing technology in the short term. I do think there are some improvements in shelling machines on the way, which might bring us closer to the optimum situation, but it has come a long way. So mechanized processing makes sense, especially if you have a market for brokens. So, you know, in a lot of ways, you would have thought that the Indian market would be ideal for mechanized processing, in the sense that there is a very good market for brokens, relatively high prices of kernels, and plentiful supply of RCN. That's a great question. We could have a whole session around that, and you probably need people better qualified than me on that too. Thanks for that question. Back to you, Blessing.
Jim, maybe we should invite Bala to engage further if he's available. Bala, can you hear me? If you can hear me, we've just enabled your microphone. Kindly accept.
Well, let's contact Bala Blessing perhaps after the event, and maybe we'll plan an event around processing, mechanization of processing, trends in India, Vietnam, Africa, and Brazil. And that'll be a really interesting conversation sometime in the future.
Okay. Well, I have another question here which says, you mentioned poor policy as a threat. Can you give an example?
Well, yeah, I mean, I mentioned protection of inefficient processors. I think that's an example of a poor policy. You know, for example, offering incentives to processors that are in business many years and haven't really made it it might be politically expedient, but it doesn't necessarily mean that it makes sense for the sector as a whole. Secondly, I think perhaps you can talk about management of the raw cashew nut market. Supporting processors' access to raw cashews might, in certain circumstances, have a bad impact on the prices received by farmers. And that could be, obviously that's highly negative if that happens. So policy needs to balance the interests of processing and further value addition with the interests of farmers and with the interests of RCN exporters, because although we see African processing growing, most African countries will still be exporters of RCN for many years to come. There's also the aspect of processing of things we fail to do. So failing to facilitate food safety, access to finance, failing to facilitate education of managers and processing staff, all of those things would be failures that would be, let's say, not necessarily poor policy, but absence of policy in those areas. Back to you, Blessing. Okay, I think we may have lost Blessing. I hope you can still hear me. So I guess we're coming to the end of the session today. I see one final question. It's a question with regard to overprotection of inefficient processors. What I'm saying is that in cases where we can take the example of Côte d'Ivoire, there is, and it's the only country with subsidies offered to processors. So if a processor gets a subsidy for 5 years, and at the end of that 5 years is an efficient processor exporting, making a profit, building capacity, good labor conditions, then it's a really good job. If that processor were not doing any of those things, it would be a mistake to continue to subsidize their activities. It needs to work both ways. So if processors who, for example, fail to deliver on food safety or fail to deliver on contract reliability are supported, they will drag down the reputation of the entire sector. That's really what I'm trying to get at on that point. So there has to be a moment when that balance of interests that we talked about, the interest of farmers, the interest of exporters, and the interest of processors, and the interest of their customers, in all three cases, are considered and looked after. And it's not a good idea to continue, for example, moving away from Africa, it would not be a good idea to continue to allow child labor in factories, because that will drag down the whole sector. And therefore, subsidizing people who don't do the right things or work efficiently is damaging to the entire sector, not just to those individual businesses. Blessing, I see you're back with us. Did we lose you for a moment?
Yes. Thank you very much, Jim, but I did capture everything. He said somebody actually wants to know, what ACA is doing to support this policy, and I'll just take that question and answer. So ACA supports research and policies, and ACA engages governments on the policies and for review of the policies to enhance their benefits. We also play a role on the CICC to ensure harmonization of policies in the different countries. Thank you. Jim, I don't have any other questions here. Maybe as a way to conclude, what should we be looking out for in the next 2 weeks prior to the next GME? Jim, please kindly unmute yourself.
Sure, Blessing, thanks. I'm not seeing a particularly busy period ahead, at least in my imagination. I think RCN prices will be steady. I think we will see the kernels market relatively quiet. It's June coming into July. There is potential for a rebound in kernels prices. They're probably, to my mind, too low at the moment, especially in relation to RCN, but also in relation to demand. Inventories will tighten, particularly RCN inventories at destination as product is used. But we will also see a reduction in processing this year in Vietnam. That's more or less over the rest of the year rather than just the next 2 weeks. And I think there's also some good news. I think we're going to see more supermarkets and more roasters looking for African suppliers. There are right now 2 European supermarkets running promotions based on exclusively African cashews, which is really interesting. And I think we're going to see more of that. That may not happen in the next 2 weeks, but I think you'll start to see some signals of that in the next 2 weeks. That's what I think. I hope I'm wrong. I hope it's really busy and really interesting period, but I think it might be a bit quiet. Thanks very much.
Thank you very much, Jim. In the absence of any further questions, we would have to bring the session to an end. And ladies and gentlemen, thank you very much for joining us again today as we looked at, or we answered the question, is cashew processing at a crossroads? Join us again in the next 2 weeks for the next GME. I would also like to remind us that the registration for the ACA 16th Annual Cashew Conference is ongoing, and there's an early bird rate for everyone. To access this, just click at acaliveevents.com, acaliveevents.com, and early bird rates is until the 30th of August. Take advantage, and we hope to see you all in Abuja. The next GME comes off in the next 2 weeks, which is the 13th of July. Bye-bye, and do take care.
Bye-bye. Thanks, everyone.
The African Cashew Alliance ACA presents to you the 16th ACA Annual Cashew Conference and Expo. This year's edition will be held from the 12th to